So in terms of what I'm going to cover, you'll see it in front of you. But I think most importantly, it's to take away from this where things are heading, where they could go, because it's I think it's probably obvious to a lot of people here that the writing is on the wall and something has to be done. Now, in terms of what we do something very straightforward at the local data company, and that is we walk streets and we collect information. And here's a typical record of a subway. We collect the address description and everything else, and that's what we do. So when it comes to the actual methodology of what we're doing, we walk around these town centres in a 6-month period of time, and we record whether there's a trading business there, and if it's a vacant void unit, we record it as vacant and void at that particular point in time. So for all the agents in the audience, if they say, well, is it being marketed? Is it on a pre-let? Is it going to be redeveloped in 3 years' time? The answer is we're not interested. It's what the shopper sees when they walk down that particular street. So that's what it's all about. The period of time is the second half of 2010, so it takes in the most important time for retailers at Q4 and the build-up to Christmas. An interesting thing about this last report for us, just as an aside, and I think unfortunately the Sun's mentioned it, we've had quite a hard time, I know retailers have, collecting this data, because in light of what we do, we go to some secondary and tertiary locations which are quite, believe it or not, dangerous. It's not like going to Hellmand, but for the local data company, we have had incidents where people have been followed down dodgy streets. You get the village nutter, and we've had a couple of cases where people have had their kit nicked. So we have had, as a result of the recession or whatever, some issues as a result of people snooping around dirty, odd streets and people thinking you're the police or the council and then taking off after you. So it's been a challenging 6 months for us. So let's start by looking at the general trend. Now, I think the most important thing here is whilst we're at an all-time high of 14.5%, you'll see here that we've started to dip below the mean line. Now, that's good news, and hopefully that will continue. But I think the most important thing about this slide to recognise is that are we ever going to go down to these levels seen pre-recession? I don't believe so. And therefore, do we have to accept that as a UK average, we'll have 10% vacant shops out there at the whole time? And therefore, something has to be done. And the implementation of a change to the business rates relief coming in April means that whether 30, 40, no matter 1,000 shops there, someone is going to be having to pay business rates on them. And therefore, someone is going to hurt. And there's going to be an issue. So it's going to have to force some kind of change. And clearly, planning, local authorities, big society, whatever you want to call it, is going to be a key driver there. So that's the national picture. If we come in and look at the regional picture here, and I apologise that it goes to sort of 4 decimal places, we're not as sophisticated as that, that's the software. You will see around here that the North East, North West, Yorkshire, Midlands are right up there. So people have been talking about the North-South divide, and the reality is that there is, and we can't come away from it. And there's a North-South divide in vacant shops, there's a North-South divide in socio-economic profile, there's a North-South divide, as you'll see later on, in political makeup. So that is reality, and that's happening. And I think you have to ask yourself, well, why is that? And we'll have some investors in the room, and we'll have some retailers in the room. But there are a whole load of factors which are going on. But if you look at the number of retail investments going on in the north of England versus the south, apart from places like Trinity Walk in Leeds and stuff, it's very much in favour of the south. Okay, low yield, low risk. The north is generally high yield, high risk. And that's starting to come through when you look at that development pipeline. If we move on to small, medium and large, and what I'll do now is let's just start off by looking at the large centres. So the large centres, you're seeing this greatest difference that's going on within these divisions. And you can see, you know, averages topping on 20%, 1 in 5 shops. It's fairly significant, yet it can drop down to, you know, as low as 12, 13, 14%. So the differences are not just the odd percent here and there. But if you then start to add in the medium-sized centres, you start to see a very similar pattern. And the one area I'd like you to take away today is that I personally believe these medium-sized centres, which we classify as essentially being 200 to 400 shops, I believe are at most risk in terms of the retail profile of the UK, and I'll explain a little bit more. They're the ones that the multiple retailers are likely to withdraw from. They're the ones that have got the retail parks on the fringe, because they're not a Birmingham, but they're not a little Market Harborough. And then when you start to look at the small, from here, you can start to see that you've got some real differences coming in, from 9% to 18%. Okay, 100% difference sitting there as to what's going on. Now, all of that's quite confusing. Say, well, what's the picture? It's very difficult to give you a full picture as to what happens here, because every single town, region, county has different dynamics going on. So 2-3 years ago or whatever, Derby didn't have a Westfield. It has a Westfield. That has impacted the whole of the region. Leicester's got a High Cross. That's impacted the region. But Foss Park has been there for a long time, one of the most successful shopping parks in the UK. So the dynamics are constantly changing, and that's why at the local data company, every 6 months we believe is a key barometer as to what changes are happening. So what we'll do now is we'll go on and we'll start to look at town centres, and we'll split this around a bit. Here you think, bloody hell, what are all these dots? The main thing to take out of these dots is, one, you'll see that the mean line trend is up. You'll also see there's a massive difference, and the colours represent regions, and we'll start to look at what this difference is. So firstly, what we'll do is we'll go in and we'll say, let's just look at the large towns. So large towns are now starting to look flat in terms of that vacancy when you look at the differences. But you can see some big differences happening up in the tops here with Rotherham, our top player at the moment, down to some people who are actually not doing too badly at all. Salisbury, okay? So similar sized towns, but you probably would say, well, I wouldn't compare Salisbury and Rotherham, but they are large centres. They've got more than 400 shops. But you can see this difference is happening. If you then turn around and say, well, let's look at the medium shops, this is the point I was making about high risk. Look at that line, right up. They're all showing this propensity for a greater increase in shop vacancy. Now, these medium centres, some people out there may call secondary centres, tertiary centres or whatever, but you can start to see there's a big difference, because when I go to the small centres, it's starting to come down. But look at the differences of performance in the small centres, but you can see that a large majority are below that national average of 14.5%. So that's the kind of differences that you're seeing by size. If we now take somewhere like, say, the southeast, you'll see that's where the southeast centres are performing. So whilst everyone may say it's affluent, it's still showing a trend up. And then if we take the northeast and the northwest, you can start to see that a large proportion of those centres are right up there above that line. And these are the dynamics which are going on. And you can start to add in, the West Midlands and say, well, let's take out the northeast and just compare the southeast and the West Midlands. And you can start to see where these differences are happening and the different performance of those centres. And all those centres have got something different going on there. So that's looking at the centres in terms of the size and the location. This scattergram here is showing net change. So what we're looking at here is every time we go down those high streets, we look at how many have opened, businesses have opened, and how many have closed. And you can see the good news is we've got quite a good spread. Before we had a lot over in negative territory, but here you can start to see the 50-50. Hence, going back to the first graph of the national vacancy rate, we're starting to see it flatten out. And this is what you're starting to see. But again, if you start to come into here and start to say, well, let's look at the large centres, you start to see by region that, again, you've still got a number who are sitting out here in the negative territory. And then you come into the medium and you're starting to see, again, a greater split, but you've got some big ones sitting out here at the more than minus 1%. So that's a negative. So the stock changing in a negative manner by 1%, creating 1% vacancy every time we go down the street. And then the small, you can start to see, but a greater majority are sitting out there in the positive territory. And you can start to look at this again, as I say, by region, and you can start to say, well, let's look at the northeast. Okay, so it's pretty obvious, northeast in negative territory looking there. But if we look at somewhere like Wales, you can start to see that it's got a bit more positive territory. So you can see just from playing around with the data there, both at the centre level and at this sort of activity, the churn level, that you've got a lot of very different dynamics going on there.